Welcome to Crescat's Market Call, featuring our macro and activist mining research. I'm Kevin Smith, Crescat's founder and chief investment officer. Before we get started, please refer to our important disclosures pages on the screen now. These can also be found in the description on Crescat's YouTube channel and on our website. Crescat's Market Call is about sharing timely macro and newsworthy geologic updates, both positive and negative news across our holdings as they arise. These videos represent the opinions of Crescat as a mining and exploration industry advocate. Our objective is to share the overall geologic progress of our activist strategy in creating new economic metal deposits in viable mining jurisdictions around the world. The securities discussed herein do not represent an entire portfolio, and in the aggregate may only represent a small percentage of a Crescat strategy's holdings. The issuers discussed may or may not be held in Crescat's client portfolios at any given time. This video is not intended to be, nor should it be construed as, an offer to sell or a solicitation of an offer to buy any security. If you enjoy our videos, please click on the like button and make sure you're subscribed to our YouTube channel to get notified of upcoming episodes. You can also follow Crescat Capital on Twitter for ongoing macro research and important news updates on our activist metals positions. If you want to learn more about our investment strategies, we encourage you to reach out to Marek Iwahashi. His contact information is on the screen now and can also be found on our website at crescat.net. So we're going to get started. We have a slightly new format. We are going to be pre-recording our videos here going forward for compliance reasons. It's just, and hopefully, as a result, it will also help us to, make them a little bit more concise and polished. We'll find out, and then we will still be publishing them on Friday at the usual time. Maybe even there will be more on time. Let's hope so. So let's get started here. So I showed this chart in our last Friday presentation. And we had another monthly Michigan survey of consumers that came out, and so I just wanted to update this chart, and I think it's highly representative of one of the big dilemmas that we face today, and I like to call it the Fed is trapped, but in the sense that we have this historic divergence between consumer inflation expectations and what government CPI statistics reflect as ongoing as inflation and inflation expectations. So there's something called the 10-year break even. What is that? It's the Treasury inflation protected securities, and there's different maturities. There's a 10-year TIPS, it's called Treasury Inflation Protected Security, that implicit in the TIPS is this expectation, market expectation of what inflation will be, but it's not really what inflation will be. It's really of what CPI will be, the Consumer Price Index. And so according to the University of Michigan Consumer Survey, the average U.S. consumer believes that inflation will be 6.2% over the next 5 to 10 years. It's a survey of some 800 people that the University of Michigan has been doing for like 50 years. And they update this thing every month. And this is the mean expectation among these 800 people that are surveyed of what inflation will be over the next 5 to 10 years. Well, how can the 10-year inflation expectation in the CPI in the TIPS market be so different? Well, because it's government statistics of inflation, and that's called the Consumer Price Index, or the CPI, and that's what the TIPS market, the TIPS Treasury market, is based upon. So what this shows is that consumers believe, and have always believed, as the chart shows, because the red line has always been above the turquoise line. Consumers believe that inflation will actually be higher than what government statistics report inflation to be, and what the tips market, prices it to be implicit in the market for CPI. So, so, what's really going on here? What we're showing is this recent divergence, this recent spread between the two, one going one way, one going the other way. To me, it suggests that that consumers, number one, they don't believe the government CPI statistics, but they don't believe them to a greater degree than ever before. And I think that's a general signal of government mistrust today that is only growing. And this is what we go on. This is what's going on. This is the dilemma that the Fed has. Is that they're trying to cut interest rates. Now they are cutting interest rates. The Fed just cut interest rates today by 50 basis points. We are recording this on Wednesday, by the way, and yet, because they're concerned about employment, and they think that they're comfortable that they brought inflation expectations down. Well, this Michigan survey doesn't look to me like they brought inflation expectations down. What's going on? This is an indication of the stagflationary type environment that we believe we're in. Let's go on to the next. I've updated this chart recently. I've showed it before. Here we're looking at the entire Magnificent Seven stocks, which show that as of, I think it was July 10th, these stocks reached a historic record level for any seven stocks. Their collective market cap, or their collective enterprise value, that's net of debt, the net debt, in addition to market cap of these companies, relative to GDP, reached a record amount of 59.1%. And this is the highest valuation for any seven stocks in history. It's reminiscent of other periods, like in 1929, like in 1972, like in the tech bubble, where the largest cap stocks reflected an unusual percentage of GDP. Why does this matter? This is one of Warren Buffett's favorite indicators when he looked at market cap relative to the GDP of the overall market, which is also one of the reasons he's very concerned about valuations today. He wrote one of his most bearish ever annual shareholder letters. He's concerned about valuations. I believe that's why he sold almost half of his Apple recently. So we have record valuations for large cap growth stocks, for large mega cap tech stocks. This is a concern. I personally believe this is a bubble. I just do, and we remain short exposed in our global macro and long short funds to these Magnificent Seven and large cap growth stocks. We're just showing that this may have peaked. It may have already peaked on July 10th. Let's go on to the next. We're not affiliated with Charlie Morello, but he put out a tweet that I think is in a table here that is really important to look at. I mean, people think that when the Fed cuts rates, that it's bullish. Well, it kind of depends. After the first rate cut, can there be a soft landing? There have been soft landing type periods, and there have been not so severe kind of recessions in the past. But this is just showing the difference between whether it's a 25 or a 50 basis point cut. And his point was that he sent this out a few days ago, but his point was that if the Fed cuts by 50 instead of 25, it's a signal that things, could be, much worse on the economic front. And that's why they're having to cut more aggressively. And it's showing the last two times the Fed did a 50 basis point cut for the first cut, and that was in 2007 and in 2001, right ahead of the global financial crisis and ahead of the tech bust in those 2 years. And the markets were down substantially. So Fed cutting rates is, can be bullish if we really think they can engineer a soft landing. But it can be bearish, especially if we're coming off of record valuations, which can only add to the pain in the economy if the stock market really does start coming down. So Fed is concerned about employment, and that's why they're cutting rates. But it's not such a great sign, the 50 basis point cut. It might be a sign that the economy could be getting worse. Otherwise maybe they would have just cut by 25. And on the other hand, the bigger cut in rates is also inflationary. And so we have to keep that in mind too. So let's go down, because the second part of the Fed's mandate is that they have to fight inflation as well as employment. And that's why they're trapped. That's why I think they're trapped. Never before have they, they think they've got both sides balanced in terms of supporting the labor market and supporting, a low inflation rate. But I think they're pinned in on both sides. Let's go on to the next. This is looking at yield curve inversions. I think Tavi's going to have a chart on yield curve inversions too. And we're not affiliated with Game of Trades, but he put out a nice chart on Twitter that showed other times, that showed the last time that the yield curve, and here we're looking at the 3-month versus the 10-year, had been inverted for a record time. The 3-month versus the 10-year is a very common section of the yield curve to look at for predicting a recession. One of my professors at the University of Chicago wrote his PhD thesis on this 3-month versus 10-year spread, and his PhD thesis was that this is a recession indicator when this happens. And we've had like 2 or 3 out of sample recessions that have happened since he wrote that paper, that kind of proven him right, validating his thesis. But this is showing that the last time the yield curve was inverted for a record amount of time was right before the 1929 crash. And personally, I think we have valuations that are just as frothy for large cap growth stocks. Let's go on to the next. Here's another economic data point that's a recession indicator. Our equity model has been very bearish on restaurants here at Crescat, and one of our analysts, Nathaniel, has been helping us identify different restaurant stocks that are model scoring poorly to short in our global macro and long short funds. But what's going on here? This is an index by the National Restaurant Association. That's called the Restaurant Performance Index, and it's a composite that index that tracks the health of the U.S. restaurant industry, and it's based on it's based on both their current situation index as well as their expectations index and restaurant traffic and so forth. But if you look at this index of the health of the restaurant industry is in what looks like recession territory. And I'll just say that is being confirmed by our equity model when we score on a number of different fundamental criteria, the restaurant stocks as well. Looks like just one recession indicator. Let's go on to the next. Here we're looking at the University of Michigan Consumer Confidence Index, their headline main index from the Michigan survey, which has been weakening, and in general for the past few years, and we have perked up a little bit recently. That's the blue line. But the green line is the share of equities, consumer share of equities based upon the household survey of nonprofit organizations and households and nonprofit organizations. So their ownership, the ownership of financial assets among U.S. households is basically at record high territory, as shown in that green line on the right-hand side of the scale. And yet, but see how it's normally correlated with the consumer confidence index and how these two have been diverging recently. This is a setup, this is a problem, record high ownership of stocks. We've shown the historically high valuations as well. If this is the type of stuff that could make this recession, much more of a hard landing kind of a recession once it starts to unfold, as stocks start to come down. Let's go down to the next. NVIDIA, and this is showing the insider selling of the CEO of NVIDIA, Jensen Huang. He has a pre-planned stock sale program, which he appears to be selling to the max that is allowed under that program. Interestingly enough, it's at the same time that the company has announced a $50 billion stock buyback program. So, Jensen Huang's been selling stock at a clip of about 120,000 shares every other day on average for the past couple of months. I think he's already sold something like over $600 million worth of stock. Yeah, he's a multi-billionaire based upon the valuation of the stock. But he is personally selling at the same time as his company is buying back stock. Seems a little odd. It's allowable under the SEC rules and under this pre-planned stock. But look at those red bars at the top of this chart, which basically show the amount of insider selling over the last either 3 or 5 years. Looks like 5 years. 3.4 billion of total sales versus 800 million of buying over the last 5 years. But look at all the red in the last year, and look at the extra concentration of red just in the last 3 or 4 months. And this is because of Jensen Huang, the CEO and chairman of the company, selling stock at a very rapid pace. I think that may be my last slide. No, one more. So look, we believe the great rotation is coming. It's nice to see other people using this great rotation idea in term. You see a lot of Bloomberg articles recently talking about the great rotation. For us, what the great rotation is, and we've been writing about it for a few years, is this transition out of mega cap tech and overvalued large cap growth stocks and into undervalued value stocks in general, undervalued stocks, small and micro cap stocks, foreign stocks, it's a shift from growth to value. It's a shift into commodities and into inflation protection assets, and under this higher inflation environment that we believe is going to be persistent. And this chart here is just showing. Interestingly, this comes from the Sierra Club, and is an environmental group basically, and they're basically warning that natural gas capacity among power plants is increasing, and they're showing that if the pace of the new capacity additions in the first half of the year continue, we'll have a second year in a row of record new capacity additions to natural gas fired power plants, and of course we're in this energy transition, and we're trying to the powers that be are trying to get us more into renewables, solar and wind and so forth. And those things are increasing for sure, but we're still needing more gas-fired nuclear power plant. We're bullish on natural gas, but we don't think that we're bullish on oil and gas prices right now. We think they've come down too much, and Tavi's going to have a little bit more to say about that. So I think that's it for me. Let's turn it over to Tavi's macro presentation.
All right, thanks, Kevin. I might have to share my screen actually because I had to make some changes on my slides. So give me a second, and I want to make sure. Can you see this?
Yep.
Okay, perfect. So I'll get started. Oops, sorry. All right. So, let's start with this letter, which is a letter addressed to the Fed from three senators named in the screen, and essentially urging the Federal Reserve to cut interest rates by 75 basis points, and which was way above what not only the market was expecting prior to the cuts of interest rates of 0.5%, but also I think it speaks volumes to the sense of urgency that I would say most policymakers are facing with the fact that interest payments continue to rise to a degree that we're seeing now, and I do think that that's starting to really eat into the deficits in the government spending, and if we don't do anything about it, if we don't suppress rates, that is likely going to start affecting growth as well. That's just my opinion. And what is interesting as well is if you look throughout history, all the way back to the 90s, the only times we've seen cuts that are more than 50 basis points on the Fed funds rate were actually associated or very close to recessions, leading to a recession. Actually, in the 1994 or so, that period during the mid 90s that a lot of people like to refer to as a potential era, that didn't lead to a recession. We only saw actually 25 basis points rate cuts, but maybe I'll have more on that research later. If you look at the long-term inflation expectation, to me, what is interesting of what's happening currently is the fact that inflation expectations, in my view, which in this case is measured by the break-even interest rate, as Kevin was saying, this is just a measurement of expectations by the market, by where CPI rates will be in 10 years from now, or whatever duration you're looking at break-even rates. You can see that on the monthly chart, the monthly candle chart, you can see that we're actually looking at a line that used to be a resistance that now turned into a support. And this is interesting because first we had, remember back in 2020 when gold was surging and nobody knew why, or a lot of people are associating that with money printing or the expansion of the monetary base and so forth. And then later on, we all sort of clicked and said, oh, it makes sense that gold was surging. It was because inflation, those are people basically predicting that inflation was likely to see a resurgence. And I think this is precisely what's happening today. It's very similar setup. Gold prices have been leading the way to the upside, but we're yet to see some other things that tend to actually move when inflation starts to move to the upside, especially not only expectations, but my view, cyclical commodities are likely to have a move as well. And so go back to energy. Energy is an interesting market because, as you can see here, we're showing two panels in this chart. The first one is looking at energy equities in yellow. So that's the XLE ETF. So that's just a proxy for the S&P 500 energy sector. And you can see that there's a divergence here all the way back to 2022 with oil. Oil is in green. And that divergence really started when oil peaked, right when the Russian invasion actually period really happened. The peak of those concerns in markets, not in what's happening in the war itself, but in markets really peaked at that level. And then we've seen a divergence between the two. That weakness in oil markets, it's not really shared in the energy equity space, as you can see here. There has been a lot of resilience, and you can measure that by looking at the ratio of those two lines in the second panel of this chart, where even when oil was declining, energy stocks were actually still doing quite well. And that resilience, in my view, just really tells me to at least gives me conviction that this is probably the beginning of a trend on energy, not the end of one. And so I'm paying close attention to energy because I do think there is a likelihood of the resurgence of actually inflation being linked to energy prices appreciating as well. And if you look at the positioning in oil, looking at the CFTC positioning on how many of those contracts are long WTI oil futures, and you can see we're at one of the lowest levels in for the last decade or plus, as you can see here. And so basically, positioning is really off balance. So and I think that adds to the conviction as well that we could see things turning or seeing a turning point in those energy commodities too. Not only oil itself, but I think natural gas could also play a role there as well. And if you see oil a little, take a step back and look at quarterly candles of oil itself, you can see clearly that we've been sort of bumping into this for some time now. The same way oil and the break-even rates, or again, inflation expectation or CPI expectation, they're actually fairly close. They're very close types of charts, and those lines look very similar. In other words, it's hard to see times when break-even rates are rising, but WTI oil prices or Brent prices are not rising as well. They're usually linked to each other. And you can see the similar kind of trend here where we broke out in 2020, 2021 on the oil prices. And then we've been kind of, seeing this consolidation period above that trend. And I think that, this is another positive, development in the energy space as well. Another thing that is, when you think about cyclical commodities that could benefit from a resurgence of inflation, the other thing that comes to my mind is copper, because copper tends to be very cyclical. And you can see that copper actually in gold, although people like to always point out to the cyclicality of oil, of copper itself and oil, especially when you have a recession, you can notice the actual link between metal prices, gold and copper, throughout history. And what is interesting about this chart as well, if you go back to the mid 90s or so, a lot of times actually the gold movement tends to lead, especially on movements to the upside, not the downside. You can see that gold actually tends to lead those movements. In other words, it tends to move first, and then copper prices will move later. And so you can see in the mid 90s, we saw that. So gold was actually moving higher. Then later on, we did see copper prices starting to move as well. You can see the same happen in the early 2000s. Gold started to move higher, and then later on, copper began to move. And the same is happened in 2015. Gold was moving way ahead of copper during that time, I should say. That was 2018, I should say. And then after the COVID recession, when the copper actually collapsed, as you can see there in that green arrow, then copper really began to have its upside later. And so today, when you see this divergence between gold actually making new highs recently, and at the same time copper actually being having copper not too long ago was a flavor of the day, if you recall. That was, and this is what is interesting about commodities. When you tend to be in this sort of bull market in the commodity space, when you have this big cycles in commodities, they tend to be very interconnected. In other words, when one commodity starts to move, they kind of go through cycles. And I think I pointed this out in prior presentations, but what was the flavor of the day, 3 months ago? That was copper. Copper was surging not too long ago, and now it's gold. And not too long ago was orange juice, and you had sugar, lumber prices, nat gas had its day. And now it's basically in the dumps. And so you kind of can see these rotations that happen within the commodity cycle, which I think are another very kind of a classic behavior of being in a more of a bull market stage. Nonetheless, you can also look at the 10-year yield, because if you're of the belief that inflation expectations could be bottoming out, along with break-evens, along with CPI, along with all sorts of things that you can measure in inflation, then that should also create some upward pressure, all else equal, on the 10-year yield in the U.S. And so that 10-year yield in the U.S., if you looked at throughout the last decade or two, you can see that we've been in, every time we've been in very oversold. So there's two panels in this chart. The second panel is looking at the RSI, which basically measures when any security or asset is oversold or overbought. Usually below 30 means you're oversold. And so you want to pay attention, or above 70 means you're overbought. You want to pay attention to those periods, because although you may have a view that a market is on a secular trend or something along those lines, you can still have corrections along the way. And I think the 10-year yield is sort of in that classic way as well. I mean, it's if you step back and think about a few years from now, at least the view here is that there is a potential that the 10-year yield could be a lot higher. But markets, they take their time to make those movements. And we've had a big downward move, as pointed out by the RSI. The RSI is sub 30 right now on the 14-week measurement. And as you can see, I highlighted many other periods in which we had that also that oversold on the 10-year yield, which means that the Treasury bond, it was actually overbought, because they have an inverse relationship, interest rates in the price of the bond. And so you can see clearly here that there were some really big turning points. Not all of them turned out to be major turning points, but some of them were. And I think one of them that was very interesting is 2016. And it's not a political view at all, but you can see that during elections in 2016, that was a turning point where the 10-year was also very oversold. And then on the back of that, we had a large movement to the upside. I think that's a very intriguing scenario that could potentially play out today. Now, if you think about the 2-year yield, which we've had a view about, 2-year yields potentially falling and so forth, they did have a very large movement, as you can see, measured by the RSI as well. Same calculation. You can see that the RSI, but this one I'm doing a 9-day RSI, or 9-week RSI, even though it says day. You can clearly see that these bottoms are also marked by the chart as well when things get really oversold on the yield basis. And so, now in this measurement, we're not on 30, we're actually on 20. So that's also an interesting setup for some level of consolidation of the 2-year yield, which makes me believe, goes back to the yield curve inversion idea. If you think about the yield curve inversion thesis that we've had, which it's been that we are going to be steepening the yield curve. The 10-year yield hasn't really been forcing this uninversion process. What's been forcing that has been the 2-year yield. Now, if you ask me, I think that now I would give a higher weight of probabilities that the long end of the curve is going to be forcing the uninversion process of the yield curve. And so I'm paying close attention to this. And this measurement here in this chart that you're looking at, it's a calculation that we created that basically looks at all the possible spreads in the yield curve. And when you have these spreads, going above 70%, which I call it the threshold in that case, every time we've seen a recession, and this time we haven't seen a recession yet. So this is the first time it's been delayed a little bit on the recession front. However, notice that when these white line, when it starts to actually decline after hitting the threshold, it has some really abrupt turns. And so, which gives us conviction that this uninverting process of the yield curve, in other words, that the potential for the decline of the white line in this chart is also highly likely. So it's very interesting macro setup for this. And now let's talk about something else that adds to that case, because if you're of the view that maybe we're going to see more steepening on the yield curve, in other words, that potentially the longer end of the curve or the higher duration of interest rates could have a larger move to the upside versus the ones that have a shorter duration. One thing that comes to mind was what created this thesis in the first place, which was the overissuance of treasuries. And one thing that I haven't seen anybody really notice has been in the middle part of the treasury market, the notes. So you have the T-bills, the notes, and you obviously have the bonds that are the longer ones, the 10 years above. But the notes have been showing a phenomenon that I don't think has been pointed out by many people, or in fact, I haven't heard anybody talk about it. But you can see the last month, we've seen the largest issuance of notes almost in the history of this instrument. And you can see that we're going back to a large number of years here, or 2 decades, basically. And these things didn't used to be tracked back in the day. So not really cutting out the chart just for the reason because it's really because there is no data going back much further. But as you can see here, the type of phenomena that we tend to see, this surge of issuances in notes tends to happen also during recessions, or during that 21 coming out of the recession of the COVID and the pandemic issues that we had. All these things really cause the fiscal spending to also increase the issuance of treasuries, in which for a moment we've had a kind of a pause on these issuances. And now, as you can see, we're kind of seeing another wave of issuances more recently on the notes front. This is also happening on the T-bills. I don't have a chart on that on this one, but it's another aspect that should be pointed out. If we go to another thing that I think it's highly inflationary that needs to be emphasized is the Baltic Dry Index. And this is, I pointed out the first wave of inflation, and is this the potential for the second wave of inflation could be driven as well by this the how broken up things are on the logistics standpoint. So what is the Baltic Dry Index? Is really helping you to have a notion of the cost of shipping goods worldwide. And so if that cost is rising, you see that green line rising as well. So that's highly inflationary. And I would say particularly if you're a large importer of goods and services, which is the case with the US, particularly goods. Goods is the largest percentage of the trade balance when you break that down. So good imports is a very significant aspect of why we're also with the U.S. is also running a twin deficit here, and so that's an important aspect. Now, all these things have, in my view, could have a big impact on the currency front, because as you tend to see not only a twin deficit, running a twin deficit, but also this inconsistency of interest rates by the Federal Reserve. But actually not being able to, by actually having causing the interest payment issue relative to GDP being extremely high. As I said earlier, 70% of the deficit today, 70% of the U.S. deficit, government deficit, is being used just to pay down debt. And so you have to think about it's starting to really eat up to how much government spending is allocated towards growth, and which to me has been one of the main factors in the U.S. That caused growth has been this fiscal exceptionalism that we've had over since the global financial crisis really has been more prominent. But if we're going to see this inconsistency of rates versus fiscal policy being readjusted, in other words, interest rates in the U.S. having to be suppressed or likely suppressed in order to address this overspending on the interest payments, then I view this as a potential as well to have an impact in the currency markets. And one thing that is, to me, very much outside of the consensus view is that the dollar could actually weaken relative to other fiat currencies. I think we've made our case over and over again about the hard assets aspect, but also it's very important to point out what's been happening with fiat currencies like the Australian dollar. And when you look at this chart, where we've also seen historically many times where this line has served as a resistance for prices. And now recently we've had a beginning of potential that could be a major breakout, historically speaking. And if that's the case, a lot of things can be unleashed because of these trends. When the dollar weakens, you can see hard assets actually strengthening. You can see emerging markets doing much better. And And I think that gold can be very beneficiary for precious metals themselves and miners and energy and so forth. And so this is why, to me, I'm paying close attention to this chart as well. And the positioning as part of the for being sort of a out of consensus view reflects that very much so. And you can see this Canadian dollar positioning remains one of the most extreme bearish positionings that we've had over the last decades. And so it's important to be aware of that off balance positioning as well on the Canadian dollar. I was talking about Australian dollar before, but Canadian dollar looks very similar. In fact, I would even go further to say that the Canadian dollar is lagging some of these other currencies. And if this is a real movement, I would suspect that the Canadian dollar would follow along as well and do the same type of breakout. These are just my views. But for the purposes of also understanding the gold space, the metals and mining space, one thing that is important, and I think Quentin would hopefully add more to that view too, is when you're looking at this open pit projects and so forth, one aspect that is very important for these projects is the energy cost. Energy cost plays a big role into making these projects more profitable because energy cost becomes a larger percentage of the cost profile of these mines. And as you can see here in this chart, one phenomena that has been happening on the macro side is that metals have been outperforming oil for some time now. Now, I noticed I said earlier, or bullishness on the energy space. However, being bullish on energy doesn't necessarily make you bearish on the mining space. In fact, the gold to oil ratio, if you step back to the early 2000s, during that period when gold stocks did very well, during the early 2000s all the way to 2011 or so, the gold to oil ratio also was not really rising, was actually falling. In other words, energy was appreciating or outperforming metals at that time. So the opposite of what you're looking at right now. And despite that, we still saw gold stocks doing very well. So it's not, at the end of the day, this is not the critical factor that makes gold stocks fundamentally improve, but it's something that adds to that. And you should be aware of it, especially at times when there is overly skepticism towards this industry, which we've presented here many times, that has been our view at least. And you can see here, this could add quite significantly to improvement of the bottom line of some of these mines worldwide. And then you look at the gold miners, which is also remarkable. The gold miners have been sort of hitting this support line, or I should say this resistance line, for some time now. And again, remember, I just showed the many charts that also show this kind of downward trend, and where you're kind of hitting in that downward trend, and all of a sudden you just break and it create momentum on a very different and shifts the whole trend from a downward trend to the upper trend. And you can start seeing these things usually, technically speaking, when you start forming first a major bottom, and then that is then followed by higher lows, and which is kind of classic of what's happening with the gold miners. If you look at Philadelphia Stock Exchange Gold and Silver Index, if you look at GDX, if you look at GDXJ, so there's a lot of proxies you could use to see that the higher lows pattern, technically speaking, has been very well established in the gold mining industry. And when you chart gold along with that, you can see that gold, while a lot of people think, or at least have been trying to explain the lag of the miners versus gold, saying that, gold can rise and miners will never follow. No, historically speaking, which I think we can only use history in our favor for this. Nobody knows the future, but history does help to kind of find a potential roadmap for asset classes and how they potentially could behave. And you can see clearly that gold prices have been way ahead of the miners here, but potentially could be actually just signaling that what is yet ahead of us is further appreciation for the gold miners. And so that gets me excited, because I do think that our thesis is strengthening on the back of the white line, which is gold prices. I mean, matter of fact, gold miners, what do they sell? They sell gold. If gold prices rise, what you would expect that should have at least shouldn't be a negative impact, should be actually a positive impact. So, but markets have been difficult, and there's a few types of headaches that we've had over the years. There's migraine, there's hypertension, there's stress, and there's investing in gold miners. So, I think we follow that bottom right side of it, and I think that's the painful moment is just it's part of the game. But the focus on the thesis, focus on the big picture is always important. Jokes aside, and one thing that has been reflecting this bearishness is this chart too. I mean, a lot of people look at this chart. There's two types of investors, generally speaking. There's a lot more types of investors, but generally speaking, there's two types of very important investors. The ones that look at this and say, oh crap, this is terrible. This is a disaster. I'm not going to even go there. I mean, what the heck? Is this a structural problem in this industry? And there are others that draw lines like this and say, wow, is this likely forming a bottom? And you can see that the decline of this chart, the downward trend that we have clearly shown in this chart, that I think the yellow line also helps to see that kind of declining trend. You can see that since 2015 or so, we've been going sideways on that. And so, it makes me think that, these bottoms, they're not large bottoms. When you have like these big structural declines, large bottoms, they don't form all of a sudden. They really take time, especially because it hurts investors' mentality and forms so many opinions. I mean, think about this. Think how many people form opinions about the mining industry just by looking at this chart. I mean, majority of people in the market don't even want to touch gold stocks because of this chart. And so, it takes conviction. It takes a lot of work to understand and have an opinion about where fundamentally these companies could potentially be. And I view this as a very much a legacy industry that could potentially be on the very forefront of a secular upside movement, given what gold prices could do 5-10 years from now. And so if we are in that environment where gold enters a gold secular movement, this could be actually a big change in this chart in particular that could look quite the opposite 5-10 years from now. So to me, this is a big focus on why I like the miners so much. And another aspect, I was just looking at one chart that I worked on years ago, looking at the global production of gold, in which, in the 70s, early 2000s, we've had, two similar trends. Was that when gold production was falling, actually we were in a very very strong bull market. Perversely, that was positive for the miners, believe it or not. The fact that they were not producing a lot, although they held gold reserves, and some of them had high quality assets, others have bad quality assets and so forth, but they still actually perversely also had a very strong decade during that period relative to other decades. And so what is interesting about this today, and this is not picking on Barrick itself. I mean, you can see this across the industry, but this is the second largest gold miner in the industry. And so it's remarkable that we're seeing this this downward trend, lowest gold production in over 20 years. And, the fact that a lot of these miners have been, kind of shifting away from gold focus into copper and other things. And as we see that transition, I think that that's also quite positive for the gold space, because supply-wise, another aspect, and S&P Global put out a great research showing the breakdown of CapEx. So breaking down CapEx, development per CapEx versus sustaining CapEx. So how much you spend to sustain a mine that you have versus how much you're developing things to become a mine one day. And guess what? The sustaining CapEx doesn't really change throughout the years. What you spend usually doesn't really change, more generally speaking. And that is very well reflected in the chart. The problem is that the other side of it, the development side of it, has been actually shrinking. In other words, we're not seeing the new development of mines in the copper space, in the gold space, and all sorts of metals, silver space, and so it's really interesting that on the back of those, you tend to see actually very positive trends. And the 1970s is arguably one of the best periods to look back and remember how the lack of discoveries, the lack of exploration budget really, set the stage to a long-term bull market at that time. And we think that there's a lot of similarities with that today as well. Last thing I want to point out is what's been happening, just a measurement that I did by looking at the cash flow margins by sector. And I used the gold companies, which are not a sector, but I added the gold companies here, the precious metals industry. I looked at all the companies that have over $1 billion in market cap in the Canadian and US exchange. And you can see that their cash flow margins is actually significantly better than other sectors, even like technology, that have a cash flow margin of 27% or so. This chart is just one way to kind of see that fundamentally we are seeing lots of improvements in the gold space, and not only that, but also relative to other industries and sectors. And to me, that's really what adds to the case. And at some point, you start seeing investors becoming more open-minded to those improvements and potentially changing their views and allocating more capital to the space, creating those big changes, those downward movements becoming now upper movements at some point. And so anyways, I think this is my last chart. So I'm going to pass it on to Quinton Handy now.
Thank you, Tavi. I thought this slide was appropriate, kind of where we're at. You know, it's like mining. It's like having a party and nobody comes. This poor kid, obviously, all ready for a birthday party. Unfortunately, his friends, for whatever reason, couldn't make it that day. It's a very sad picture, but I gotta say, on a personal note, I remember when we first moved into a new town, and my daughter, it was like within a month or two of starting in a new school, we had a birthday party, asked a bunch of kids from the classroom. Of course, nobody knew us or whatever. I don't know what happened, but we had a similar situation happen where we had a birthday party and nobody came, and it was heartbreaking for my daughter at the time. She was about 7 or 8 years old. But I quickly learned that you got to go out and you got to find the people that want to come. Okay. And so we pivoted hard. And within a week, I rounded up other kiddos. I went back to the previous town we lived in, got some invitations out, got other people, from our church and stuff on the list of invitees. And by the next week, we had a heck of a birthday party. So, here in the gold space, we kind of bemoan the fact that we seem to be all on our own at times, but really there's a pivot coming. This great rotation that Kevin and Tavi talked about, I think we're finally seeing that moment turn. We'll probably also see, in addition to the great rotation, if they do indeed lower interest rates in a significant way, I think there will be a return of money, that especially into the riskier end of the spectrum, like mining. Let's get into it. Look, we were off for a couple of weeks. Beaver Creek conference was last week. Denver Gold Forum was this week. I was not able to attend. Unfortunately, I had some family issues that prevented me from attending. Kevin and Tavi were up at Beaver Creek. Had a great old time from what I hear. I wish I could have been there, but in the process, as we all know, of these conventions, companies love to publish news. This is usually when the headlines start to roll in abundance. So over the past 2 weeks since we had our last video, there's been a number of stories, and I got to update you guys on these. Okay, now this is Wednesday. We're recording this, so this is Wednesday, September 18th. If this airs on Friday and there's news coming out on Thursday or Friday morning that I don't have in here, guess what? It's going to have to be on the next round of video. So let's begin. All right. Snowline had absolutely stupendous results. This is an infill hole, 6 grams over 101 meters. You don't see holes like this every day. And that was that's right up the top of the hole, but it's within a much broader interval, 4.1 grams over 244.9 meters. That is jaw-dropping. It's one of the best holes they've had to date. It does tell us that high-grade component, the core that's right at grassroots effectively, is looking very robust. In fact, this might even help the grade in the model in that area. This particular drill hole came out at 992 gram meter, a phenomenal result. The other hole that you see listed there, number 80, is a bit on the margin of the deposit, but still a very, very solid result. 485 meters, a little under a gram per ton. And it does have a higher grade interval in there, 177 meters and 1.5 grams. All right, so this is just one of these rare unicorn deposits that has remarkable continuity and can deliver results like this. All right, let's go to the next slide and talk about it. Okay, so the hole that's the topic of, or the headline of that news release is right there in the center. I don't have a 3D model this week. I had to trim up my slides because there's just so many things to update. So I'm going to have to erase through these things. Look, hole number 78, you can see is actually drilled generally in the opposite direction. So it's drilled towards the northeast compared to most of the holes, not all of them, but most of the holes. And I think it gives us a real test. It's like a real test of that high grade component up at the top of the hole. We're going to look at it in cross section next. Go to the next slide. There we go. Okay, you can see the hole. It's going the opposite direction from all the rest of those holes. All of the rest of those holes, and there are a few holes on this image that have some assays coming back saying, you know, we're going to see some more numbers out of the company. But all the rest of the holes in this image, at least, I think, all go to the opposite direction. Okay, so hole 78 really gives us that solid test of that high-grade component. And it really actually gives me a lot of comfort because the veining, albeit steep, you know, tends to dip back towards towards the right-hand side at a steep angle. And because of that, you know, it's like, well, you know, are we going to see the same values from one hole to the next? This demonstrates remarkable continuity. It's very seldom that you see such a continuous run of gold or, you know, effectively exactly the same high grade component replicated in holes going different directions in a deposit like this. There's almost always some variance. Not in this case. This thing is just remarkable. We've talked about a bowl of soup. This thing seems to be a big bowl of soup. It's very uniform in most regards in terms of its grade. Let's go to the next slide. Now, the company did see a lot of visible gold in that particular hole. What does that mean? Gravity gold recovery. Okay, so gravity will recover a lot of gold out of this system. You can see gold such as this, especially this coarse size, and I've talked about this in recent videos, should be readily recoverable in a gravity circuit. It is going to be free milling. It's not locked up in sulfide or something weird, guys. This is what they're trying to tell you with these images is this is free gold particles that should be readily recoverable in a mill. Okay, very, very good. Okay, let's go to the next slide. Now they had some news out of a couple of other stories. Okay, this target here, and I just realized the label that had the name on it got chopped off, I think, towards the bottom. But I believe it's like the Marguerite property or something like this. This is another target. Hasn't been drilled yet, but it is a new target on their ground, Snowline's ground. So it's yet another reduced intrusive target. In this case, the granodiorite kind of has an elongate shape. You can see the kind of olive colored lozenge shape in the middle of the image there. This granodiorite body is a monster. Okay, it's about 1.5 kilometers long, and it's about 300 or 400 meters wide, just the surface there. Look at the numbers they're getting. They're even getting numbers off in the little subordinate dike up to the north there. But you've got a remarkable string of nice rock chips. These are not soils or some airy-fairy thing. This is actual rock chip data off a brand new discovery. Do we think that looks like something that might be of interest? Heck yes. This is another reduced intrusive discovery. Will they drill it this year? Hope so, but we'll see. Go to the next slide. And I think the same thing might have happened here. Sorry, the labels got cut off at the bottom. I didn't center the photos quite right. This is up in the Rogue property, a new target. It is an epizonal, basically an orogenic system that's very, very shallow. It's like the Jupiter system. They got some good numbers. They did some prospecting up in the field. And again, these are rock chip samples. They're seeing quartz, vuggy quartz, which says shallow, that has pretty good assays, 4.31 gram per ton and 6.11 in outcrop. So, in the target is long. It's at 1.3 kilometers long from northwest to southeast. I think this is very encouraging. It tells me that there's a lot more going on up at Rogue. Do not forget, there's two discrete types of deposits at Snowline. We have not only the reduced intrusives, which are like Valley, which are just enormous. We have these amazing shallow level orogenic systems, epizonal orogenic systems like Jupiter and such that are more structurally controlled, perhaps not directly related to an intrusive, more related to metamorphic fluids and stuff, but really great targets in their own right. All right, let's go to the next slide. We got to put our skates on because we got a lot to talk about today. Okay, Goliath had yet another update. I think it was early in the month. It was around September 3rd or so. They talked about seeing concentrations of gold. In fact, this particular drill hole has one of the highest concentrations. I know it's kind of hard to see, but that middle image of core, all those little red polka dots that you see there, those are individual discrete grains of visible gold in core. So that's one of the highest concentrations they've seen to date. This is at the Sherbet target, but I believe it's one of the lower lodes. These are very remarkable results. The company keeps putting out. Still waiting on assays, but I'm very encouraged by this, and I'm very optimistic. Now, one thing I noticed about this is that the mineralogy of this, which I think is down at the Bonanza level of the system, Bonanza lode, is a little bit different. It's not your typical galena, sphalerite kind of assemblage, sulfide assemblage with the gold. In this case, I'm seeing darkness, which looks like a mineral called actinolite, maybe a bit higher temperature, but I'm also seeing maybe some brassy stuff in there that looks like probably pyrrhotite is my guess. So we're seeing a little bit different flavor of gold mineralization. In fact, some of those little silver flecks you see in the close-up images might even be bismuth minerals and stuff, which, what does this mean? What is this crazy geologist saying? It simply means this mineralization is probably closer to the actual mineral source, like the intrusion or whatever that kicked off this gold. It's probably getting closer to the actual origin of the fluids. That can often be a good thing because it says, hey, maybe we're in a main conduit within the system of fractures in the ground that became mineralized, and to me that's very encouraging in its own right. Note the company is targeting 36,000 meters. I think at this point, which is about 2 weeks after this news release was released, they're starting to ramp down. The fall is here. The winter is going to come very soon. I think they were at 8 rigs. I think they're winding back down to maybe 6 or 5 rigs, and then probably within a week or two they'll have to be off the mountain because the snow will fly. They'll have to do a lot of logging. I think they're behind in logging core. They try to drill as many holes as they can during the warm season, and then they have to log them probably well into October is my guess. But there should be a heap of news coming forthwith. Let's go to the next slide. One more thing I thought I would throw up. They've done a really good job with this imagery now, showing the structures that they're now seeing. If you think back to the first days at Sherbet, we had the one structure, and we were very excited about that. That's that structure up at the top. Look at this thing now, and these are well positioned on the map. They're defined by drilling. These are things you can hang your hat on. We have multiple structures now, and you can see the Bonanza lode, which is likely the one that VG was in, actually dips in a somewhat different direction than the Sherbet above. That's interesting in its own right. Okay, don't know what that means exactly yet, but I think that's telling us something. And notice they have more lodes down there at depth as well that they've hit in recent deep drilling. All right, like lots of really good news. This is the year of discovery for Goliath. Go to the next slide. Okay, here we have again boring. Gold everywhere. Just pictures of gold. I mean, everybody's getting absolutely bored of seeing this kind of stuff. Not really. No, of course not. Okay, Sitka announced remarkable drill hole here. It's the deepest hole ever, 680 meters below surface, or downhole below surface. This thing had a lot of visible gold evident in the core. They talk about it in the news release. Read the details if you want. Here's some pictures. This looks a lot like Valley. You know, notice the blobs of gold, very similar scale of gold particles in many cases. And then you see the gray, silvery gray minerals around, which are bismuth and tellurium sulfides, most likely, that are typical of a reduced intrusion. Again, this is free milling stuff, guys. This is the kind of stuff that should be recoverable in a conventional gold mill, gravity, CIL, whatever. This is the kind of stuff that is very, very friendly to treat in milling operations. Okay, go to the next slide. Now, this image shows you in plan view where that hole is. It's number 68. Notice it was colored over here and it was drilled eastward. Okay, so the bottom of the hole is where all those stars are collected on the east end of that yellow line. That's at depth. Okay, now notice they also have a hole in progress. I don't think they would highlight that one in green unless they were kind of excited about it. Okay, but think about it. That's another mega hole that goes down very, very deep. And yeah, what might they see out of that? Well, we'll probably know pretty soon. I wouldn't be surprised if they have some more news about visuals from that hole. And don't forget, we have lots of assays coming too. Basically, they have probably a dozen holes or so that are in the lab that have been drilled in the lab for assay. So we have a lot of news coming from the company. Let's look at this thing in cross section real quick. Go to the next slide. You can see the drill hole. This is kind of that dream hole I talked about way back in, I don't know, late last year, I think, when we first kind of picked up on the possibility of high grade at Sitka. I think it was in September, October, maybe, of last year. And I talked about how, hey, you know, maybe they should drill a deep hole to see what's happening at depth down in that granite, down what's going on down there. Okay. And guess what? They got the hole down there. And guess what? There's a lot of VG in this thing. Is it done yet? No, this has got a lot of potential for growth. I talked about this, showed a 3D model in a recent video. What they're seeing here is an enormous volume of rock at depth that remains part of this target that could produce more results like this. And to give you a sense of scale, we're talking about maybe a few kilometers, like 2 or 3 kilometers from this area, this I think it's called Blackjack area, down to some of the new targets they have on the ground they picked up from Victoria recently. All right, so this is a very large-scale gold target, and these results this year, I think, are going to show us that this could be a world-class, potentially world-class, meaning a deposit that major mining companies would be very interested in owning at some point. All right, let's go to the next slide. Lots of news. Western Alaska put out news. A lot of people email me and said, what do you make of this? You know, it's a narrow interval. Okay, but Western Alaska talked about hitting CRD mineralization, albeit only 1.15 meters. But look at the grades on this stuff. 687 grams silver, huge lead, 33 lead, zinc. I think there's some zinc and whatnot in there too. And then they had another interval too, a little bit lower grade, but still interesting, like 3 meters and a bit. Just under 100 grams silver, but combined about 6.5% lead zinc. Okay, this is important. This is super important. I've talked about, like Peter McGaw's model for CRDs, where they're the skeletal hand. If you think about each finger being, a potential conduit or channel for mineralization, as soon as you get around one of these phalanges, you start to see numbers like this. Okay, so why is this important? Go to the next slide. First of all, this is a plan view of the property area. Now, the porphyry that drove all of this is presumed to be kind of down here off the south edge of the map somewhere. And all of this CRD mineralization is highlighted in the green area. So we know Illinois Creek has some, and we know Water Pump Creek way up in the north, upper right there, has great CRD, high grade CRD mineralization. Now, the goal of the company this year was to find continuity between those two. They don't have to drill the thing out, but they had to demonstrate there's mineralization between Water Pump Creek and Illinois Creek. That's a huge distance. That's like 6 or 7 kilometers between Illinois Creek Mine and Water Pump Creek. Okay, if they tag CRD in the middle there, guess what? They've basically demonstrated that there's more, phalanges to be drilled here. This is a discovery hole, in my view, albeit a narrow discovery. Now, the company is meticulous about putting geology to their drilling, so they do a great job showing cross. Go to the next slide. First of all, I got to show you the core. It's just super exciting to see. That's basically solid metal. It's lead, silver, and zinc. In core, it looks very much like the CRD mineralization up at Water Pump Creek. And here we are 2 or 3 kilometers to the southwest. This, in my view, is a brand new discovery. It looks and smells just like Water Pump Creek. So that mineralization almost certainly formed from the same ore-forming fluids that formed Water Pump Creek and Illinois Creek 7 kilometers from one another. Here we are right in between it. Now we have proof. We have proof that there is more system here to explore. Go to the next slide. Now, this cross section, clearly when they hit this is that was in hole 5, by the way. Okay, and hole 5 is this one over here on the right-hand side. It's going back towards the left as it goes deeper. There's another hole in there, hole 12, and it's kind of towards the middle of the image. Hole 12, they also saw some visuals. Notice it doesn't go down quite as deep. Man, I wish it did. I'd love to know what's a little bit deeper. Don't know what happened there. Maybe they're still drilling. I don't quite follow from the news release exactly what happened to that hole, but at least they've tagged this silver, lead, zinc zone in hole 5. So we know there's another system down there, and the purple shows you what's there. Now, what's down dip from that? What's to the right, to the left up dip? Don't know yet, but they need to do more drilling in this area, because somewhere around here, you're going to get right into a phalange. You're going to get right into the guts of this thing. You're going to see some numbers like we saw out of Water Pump Creek, most likely. All right, so some thicknesses, more thick intercepts, very high grade is my view. All right, so let's go to the next slide. This is exciting stuff. Okay, Magotes had 2 news releases over the past 2 weeks. One was about some drill holes. Remember, they got 3 holes done. 2 of them reached target depth. 1 of them failed to reach target depth. I'm not going to talk about the 3rd hole. I'm going to talk about the 2 that they drilled. Okay, everybody watching this video, listen closely. Okay, if you don't understand, it takes maybe 20, 25 drill holes in a porphyry target to make a discovery. I just wouldn't if you think you'd make discovery in 2 or 3 holes, just no. Geologists seldom do that. Okay, these are big targets, but they also are big areas that you have to explore. You have to drill 20, 25 holes. I've had discussions with Sergei Diakov, the best porphyry explorer in the world, about what he thinks is the average number. He says 24 holes. We're talking 2 holes here. Everybody's like, oh gosh, they didn't hit that. I'm going to sell my stock, move on. That's crazy. Look at where they are. Look at this map on the right-hand side. That deposit up in green at the top of that image just sold for over $4 billion. Okay, that's Filo. Filo sold to Lundin and BHP. It's a joint venture purchase. Notice it's open at the south end. It's very funny that every time you see Filo, they have this curious little open sign on their deposit at the south end. And, maybe that's for a reason. They're not explaining to most folk. But maybe that deposit might, accidentally come down, gee, what do you think, onto Magote's ground even. Think about that for a minute. It has to be drilled. I'm not saying, it's proof yet, but I find that very interesting. So the red targets, those are Magotes, right? We're going to see what they come up with. They tested 2 of them, and they actually got some pretty interesting results. Let's go to the next slide. Okay, this is, these guys put data out there for people to chew on. You basically have to read their news release. You have to take an entire Sunday to digest one news release. Steve Nano loves to make beautiful images, albeit sometimes they're confusing for folks, but I think they do convey a lot of information. Okay, and you can see the drill holes like up in there in the upper one. Okay, we have the Cruz del Sur target, and you can see where that drill hole is. That's a number. That's the first one these guys have drilled, and they did hit metal values, significant metal values. But look at the rest of the cross section here. Have they tested everything? No, no, they haven't. They've drilled one hole, and they had some pretty significant numbers. Not ore grades, not bonanza like, hey, let's throw our hands in the air and say we're rich kind of stuff. But they found good rock, good alteration, and significant anomalous metal values. All right. So, yeah, let's be a little more patient. We're on hole 1. Okay. Go to the next slide. And then here's hole 2. Okay. It's 2 views of the same hole. The upper one, it's that big long hole that goes down deepest there. And then in the bottom section, you can see it right away there. It's that hole that goes. They hit good values of anomalous metals up at the top. They hit really good values of anomalous metals down at the bottom. And the bottom intercept actually is in a quartz diorite rock. It's basically in porphyry that resembles some of the rocks we see northward towards Philo. Okay, so do I consider this a discovery? It's not a discovery hole in terms of potential economic values like we see at Philo or something. But in terms of geology, there's a long run here of 0.1x% copper and anomalous gold and stuff. This in Mali too. This smells a lot like early stage exploration success in terms of defining a very large volume and target of anomalous metal, okay, in the ground. And you can see from the geophysical expression, there's lots more to test. In fact, that Camino target over there on the right is one of my favorite, okay? Now they put out another news release. Go to the next slide. Where they talk about basically acquiring a huge amount of data across the properties. They were able to integrate the data with their previous data. You can see down here in the lower left 2 images. One is Magnetics pre-data acquisition. When they got the additional data, look at that. It bolts right together, and you can see a much clearer picture. Notice the magnetism at the north end of the property. Guess what? You remember I said that up just above that is Philo? You think there might be a connection here? Maybe. Does it look like it might come straight down onto Magote's ground? That looks interesting. There's a good case to be made. We need to explore this. Okay, holes 3 through 22 or what through 24 or whatever it's going to take to find. That's what's coming. Okay, the company has plans. It's summer, or it's starting to get warmer. Winter is over down there. This is spring in this location. It will get warmer. They'll be able to drill soon. Hold on to your shorts. Let's watch this story unfold. Okay, go to the next slide. All right, El Oro. El Oro has decided to advance the Isca Isca project in several different ways. They put out a news release sometime last week. One of the ways they're going to do it is do some more infill drilling around the Santa Barbara area. I think they've talked about 5,000 meters of drilling. And that's the infill in the higher grade core of this. I've got on the right-hand side the plan view of the additional holes they want to drill, as well on the left side over here, the cross-sectional view. This is one of the highest grade parts of the system in terms of silver and zinc and lead, but also in places tin. Okay, there's considerable tin. Now, in addition to the drilling, the guys would like to do some pilot work, and that includes, when I say pilot, I'm talking exploration level, digging holes in the ground kind of stuff, and maybe taking rock and testing it for metallurgical reasons and whatnot. But they're going to put an adit down in the Santa Barbara area and try to get exposure into the ground. So they're going to dig down and try to get exposure. And they might even try test processing some of this material. El elsewhere around Bolivia. There's quite a few mills and stuff they can put it through. So the company has ambition to kind of advance this project in this very tough market. Difficult to be aggressive with a project like this when capital is limited in the mining space right now. But these guys have a plan, and I'd like to see them follow through, especially this drilling. This drilling looks important to me. Okay, go to the next slide. There we go. Tectonic. They like to get started late in the season, but on September 11th, they announced they're going to start their drill program at the Flat Gold Project in Alaska. This is about when they started last year, almost the very same day. It is a bit wet in August. I got to say, in this location, it's really tough to get started until September. There's a bit of a dry window usually not always, but from about early September until early November, there's about 2 good months. So it is far up north. It's Western Alaska, but in this particular area, the temperatures are high enough. Like, we're not in deep winter by November. They're high enough, and they're to drill, basically to do some work. Okay, so we're going to see what the company comes up with. What are they going to test this year? Go to the next slide. Look, that news release spells out in great detail the targets they're going to test. I took this image out of their presentation deck to show you the property. And then what I did over here is I took yellow stars and I put boink, 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 4 stars on the map where these guys plan to drill. They have new targets, okay? They will do drilling at Chicken Mountain, which is where they drilled last year, and that's where most of the historic drilling is. But they also they want to drill this Added Happy A-H target, which is towards the north and needs some drilling. They think there's a structural corridor in there with some higher grades. Really interested to see what they come up with there. They also want to target that Alpha Basin or Alpha Bowl area, AB, which is basically where some of the biggest amounts of placer gold came off, that kind of red sinuous line or pink line that goes up. That's the creek with the placer mining. Okay, so that AB is a really robust target that's virtually no drilling. Okay, but it's got a lot of gold coming out of that basin. And then up at the top, they got Golden Apex. That's another area where there's a pointed watershed, points to gold in that area. There was a little historic drilling, says there is good gold values and over significant intercepts in there. In fact, some of the higher grade that's been encountered on the property is from that area. And they're going to drill that target too. So we have 4 different kicks at the can here to see what they come up with. The goal of the company is not to drill out an ore body this year. It's to show the market that this property, this vast property at Flat, has numerous reduced intrusive type targets, any of which could result in starter mine or starter pits for a company like Tectonic. All right, let's go to the next slide. Okay, Juggernaut announced 2, and I don't have all the photos. It would have taken me hours to put all the photos together, but I can tell you this. I went over to the Colorado School of Mines. They had a little conference after Beaver Creek, and I got to see the core firsthand. Similar to last year, they have visuals from their 2 drill projects. One is the Midas targets, a VMS target like SK Creek, and then one of them is the Bingo property, which is kind of actually over by Sherbet. It's not too far. It's west of Sherbet, but it's of the same ilk as Sherbet, we'll say. And of all of the drill holes they drilled this year, pretty consistent hits at Midas of sulfide mineralization. And they expanded the program over a longer strike, so 700-meter strike. Interesting chalcopyrite in many of the drill holes. I don't know what it's going to run just yet. We'll have to see. But fingers crossed, maybe we'll see some really good numbers this year over a significant, over multiple holes in a significant strike. Okay, but this one at Bingo, actually, I looked at some of the core there. Very interesting stuff. I'm becoming more and more of a believer that Bingo looks a heck of a lot like a Sherbet. It's a bit higher in altitude, I think, and it's a bit more remote. I mean, it's just a little bit harder to get to from Kitsault, say. But it's starting to shape up a lot like a Sherbet type of discovery. In other words, the mineralogy looks like Sherbet. It looks like it might be related to an intrusion at depth of that ilk. Okay, so it's high gold, high, and strong silver values in places, but also strong base metals and stuff. Be very interesting. And they were very successful in hitting mineralization in most or perhaps all of the holes they drilled here, and over significant widths too, which is really they smell like the widths of Sherbet. So I'm very hopeful we'll see some good numbers there. And by the way, last year that property bingo is what generated the highest values for the company. Go to the next slide. Okay, Yukon Metals got out in the field and got some work done before winter fell here. Remember, Yukon Metals is basically the collection of base metal projects that the Berdahl family. Remember, Berdahls are the ones that put the projects in the Snowline. Okay, so they're really good at prospecting. Dad, Ron Berdahl, son, Scott Berdahl, there's a brother. They all do a great job of prospecting. They identify targets. Snowline has the gold. Yukon Metals has the base metal targets. And they got out and did some work on the ground. And they got some really interesting results out of two of the properties. Okay. So I'm going to talk about the two news releases that are highlighted in the lower right corner. Go to the next slide. So just for reference, this map shows you all of the properties that are scattered about the Yukon that Yukon Metals has. And so this gives you a reference point. Star River is in there. I can't see the other one. My eyes are terrible. It's really hard to read this for some reason. Anyway, I'm going to talk about two of these, including Star River, which I think is next. Go to the next slide. The Birch Project first. Okay, so the Birch Project, they did soils across the target area that Ron had showed them and picked out. He said, here, guys, you got to do soils across this target. And they've developed, demonstrated a really robust gold, copper anomalous, both metals are anomalous in this banana-shaped area here over a pretty good strike, like a few hundred meters, almost a kilometer long. Now, this is interpreted to be a skarn system, a skarn copper-gold system that's perhaps adjacent to an intrusion. They're not targeting a porphyry per se as of yet. Ron told me personally, he said this looks like a skarn target, and they've defined something that they can likely drill. I think they need to do a bit more work in terms of mapping before they stick a drill bit in the ground here. But this is really encouraging start. Very robust soil anomaly, both copper and gold. Let's go to the next slide. And then there we go, Star River. Here, they got rock chip samples over a pretty broad area that are remarkable. Okay, there's one sample, and they don't have all the assays back. By the way, they have a bunch of samples that are still being assayed, but they got some bonanza grade silver. Look at that, over 10,000 gram per ton silver. So that's over 1% silver in that sample on the left. You can see some of the other numbers there, 4,200 grams, and then 1,290 grams on the right. Okay, there's a little sniff of gold with these, 0.x gram, whatever. But this is really a silver play. And one of the things that caught my eye was the real fine-grained nature of the galena, that bluish, sparkly stuff that you see in each sample photograph is galena, which is lead sulfide. Usually when you see fine-grained galena, it's very high in silver. And where have I seen that before? Well, there's a little mine in the Yukon known as Keno Hill, okay, where you see high-grade silver that's an association with very fine-grained galena like you see in these photographs, hosted in similar rocks, okay, and it's not that far away in all reality. So what is this? To me, it smells like early days for maybe a Keno type target or something like that. I don't know for sure. I'd love to get up there next year and actually see it for myself on the ground, but that just smells like a Keno type target. What does that mean? Well, look, they got to do some more work. They probably need to do soils and some mapping and some other work before they go drilling. I'd hate to see them drill this thing prematurely. Sometimes you think, oh, wow, these numbers are great. We can just swing a drill around and start drilling and come up with great drill results. You know what? It's usually good to do a little bit more work, particularly soils, like we saw in the previous image, where it defines your target better. So when you drill, you're drilling the best area, the best part of the target. This is early days. Hopefully they did some more of that kind of work, maybe soils or something. But still good results. Let's go to the next slide. And by the way, by doing this early stage work, they saved money. Okay, they didn't run out there and start drilling immediately and blow their bank account. They did, they're trying to do good science before they come in to drill next year. Okay, PJX. This is a story about looking for a big SEDEX, sedimentary exhalative based metal system. I realize it's going long, guys. Bear with me. It's a lot of news. Sorry. Anyway, this project is not very far from Sullivan. In fact, it's just a few kilometers, like 20 kilometers from Sullivan, which is one of the biggest SEDEX deposits on Earth. And they didn't hit a home run right yet, okay, the early days, but they hit sulfide, breccias, and stockwork. So sulfide mineralization, mainly iron sulfide, so pyrite and pyrrhotite, like you see in the photograph here. That looks like it might be of the vent fascie. What does that mean? Let's go to the next slide. Okay, so this is a cross-sectional view of Sullivan, and you can see that it's like a VMS where you have a feeder system coming up from below. That's all that black hackly-looking stuff. And then when the fluids came out and they spilled out on the seafloor, they produced the more bedded mineralization, which includes the lead, zinc, and silver stuff. Okay, well, what's the company trying to say? They're trying to say, I put little blue circles on here. They're trying to say they have like vent fascies, perhaps like we see in the right or left-hand side blue circle, or maybe downslope fascies even, like we see in the right-hand blue circle. But they're not saying they've hit the mothership yet. They still have a pretty good bank account, and they're still drilling. Let's see what they come up with. Again, deposits aren't found instantaneously. Usually it takes geologists a few swings at the bat to make a discovery. But we know they have really good rock samples across the property, this target area, that have very high zinc, silver, and lead. Let's go to the next slide. Okay, Cantex put out an update on the drilling. And remember, they started drilling again just a few weeks ago. I think they're trying to get some holes in before the snow flies. This is up in the Yukon, another SEDEX target. So this is big scale targets. These are the kind that I like. I like to think about, finding tens of millions of tons, say, or 100 plus million ton SEDEX deposit. And when a company comes to us and says, hey, this is the kind of target we have, I get interested. I'm not saying they found it yet. I'm just saying that that's the kind of target I like. Okay. And these guys have drilled some holes on the east end of the trail of zones that they've defined to date. And they've extended the main zone by another 250. I think it's a few hundred meters extension. But now the total length of the system they've defined is 2.6 kilometers long of the silver, lead, zinc. Now, the holes that they've drilled right now don't have assays. These are just visuals. The company is very sparing with their details. But in the next section, go to the next slide, you'll see they have a cross-section here that simply shows mineralized intervals that they've interpreted, presumably where they're seeing lead, zinc, silver styles of sulfide mineralization. And it's got some continuity to it, okay? So we have to stay tuned for assays, but it sounds encouraging. Okay, let's go to the next one. I think that might be it. Yep, I think that's it. Okay, guys, it's a wrap.
All right, thanks, Quentin. So this, as most of you know, as we said earlier, this is a new format for us, and we will be recording these videos every 2 weeks on Wednesday, and then airing them on Friday. So a little bit different. There'll be more news that accumulates over this 2-week period, and that's the plan, at least. Stay tuned, and we will still have videos on Fridays. It's just going to be every other week with a little bit more information. Look, if you're interested in learning more about our strategies, we encourage you to reach out to Merrick. His contact information is on the screen now. Give him a call, shoot him an email, and he can tell you more about our strategies and find out what about your situation and where it might be a good fit. So, Tavi, do you have any concluding comments?
No concluding comments. Just want to thank everybody for watching. Thanks, Quentin. Thanks, Kevin, for the presentation. And we'll be back, as you said, in 2 weeks. So thank you. All right. Take care.
Bye.